Thanks for tuning in to another video from Netpicks here. And today we're going to talk about the Supertrend Indicator. Now, trading with the trend, that's something we've all heard. And first thing you got to do is define the trend. And using the Supertrend, you can actually determine the state of the market objectively. And that's going to make your trading a little bit easier. It can also present buy and sell signals. And those can be taken depending on the system that you're using to trade. So what is it? How does it work? Quite frankly, it's an indicator that's a trend following overlay on your chart, almost like a moving average. And it's going to show you the current trend direction. And it works well in trending markets, but it can give you some false signals when a market is trading in a range. And it's also going to use the ATR, the average true range, as part of the calculation. And that takes into account the volatility of the market. And we can adjust the ATR using the multiplier setting. And that's going to determine how sensitive this indicator is. So the changing colors, it determines the trend direction of whatever you're trading. When it flips to green, due to the closing price being above the line, a buy signal is generated. Price closes on the opposite side of the line, it flips from green to red, and that would be a sell signal. And there are parameters you can adjust, just like every other technical analysis tool. But changing these settings, it can actually make the indicator more or less sensitive to price movements. And for the basic Supertrend, you can just adjust the period and the factor. So the period setting is the look back for the ATR calculation. Factor is what the ATR is multiplied by to offset the bands from price. And really, you got to make sure that when you adjust any setting and put it into your strategy, it's got to be tested before you do that. And everyone talks about what are the best settings. Well, you know what? There is no best setting for anything out there. The default setting is 10 and 3. And any changes that you make to these numbers is going to affect how you're going to use it. Now, the more settings that you can change, that can actually lead to a trading system that's over-optimized for that point in time. And again, any changes, you got to test them out before using real money. So basically, smaller settings can make the indicator more reactive to price movement. And that's going to mean more trading signals. Higher settings removes the noise from the market, but the risk is you're going to have less trading signals. So let's take a look at these two Forex charts. They're both the 15-minute time frame. The chart on the left has the standard setting. The chart on the right has a shorter period and a smaller multiplier. So you can see that the indicator is currently in long mode on the right. The slow one is still in a downtrend. Intraday traders would probably want to use quicker settings to allow more trading opportunities, or not. You got to test it out. If you're more of a positional trader, you're probably going to use higher time frames. And the standard setting, you should test that out as well. And how you use the information that the indicator gives you for setups and entries, that's all going to depend on your trading plan. So I'm going to give you a little bit of a strategy that you can test out. And for this, we're going to use two Supertrend indicators. So the first one is going to be the short-term one, and we're going to use the basic parameters of 10 and 3. The longer-term one, we're just going to multiply the short-term ones by 3. So now it's 30 and 9. We are going to use the ATR for our initial stop loss. Okay, so let's take a look at the strategy on a 60-minute chart. And here are the rules here. You want to trade in the direction of the longer-term trend. The example here is an uptrend. So any short trades where it turns red, you're going to ignore it. Enter long trades when the short-term indicator flips back to the longs, which it turns green. You can enter at the next candle open. You can do a break of highs with a buy stop. You can enter at the close. That's up to you. Your initial stop loss is 2 times the average true range. Now we need to be able to position size properly. And the ATR has always been my go-to stop loss method because it takes into account the volatility of the market. However, we're going to trail our stop loss on the short-term Supertrend line once price begins to advance. And this example here, it ran 90 pips before price breached the trailing stop line. And we take our stop losses, even if the colors didn't change, because we don't know if price is about to flip to shorts in this example. And we certainly don't want to give back too many of our profits. What about longer term trading and re-entry? Let's use the exact same settings for our longer term trades. But we're going to need to have a way to re-enter a market that's still trending, because there are going to be times, especially on our higher time frames, that the short-term indicator will flip, okay? And that can keep us out of the market. So we can use the pattern of a trending market to re-enter any trade that gets stopped out without a flip in the indicator. So here, that yellow splash, that's where both indicators gave a buy signal. That obviously can put the odds more in our favor. That red X, price would have hit our trailing stop loss and we'd be out of the trade. But I want you to notice that there was no flip to red in the indicator. So we have to have some re-entry rules. We're going to talk about longs here, but the opposite would be for shorts. Simply place a buy stop order above the last swing high before the stop loss was hit. You want to calculate the 2 times the ATR stop loss position using the last swing high before that stop was hit. Take a look at the dashed white line, and that's where the stop loss would go. Once the buy stop is hit and we are long, we want to continue to use the trailing stop feature of the indicator. And I want you to take a peek on the right side over here. After that stop loss is hit, there is no break of highs for a re-entry. And we also have some trades that fail. That long trade didn't work out, but that's to be expected. It doesn't matter what trading strategy that you're using. So what did we cover? The indicator, it's based on volatility, shows us the direction of the predominant price. We can use the indicator for buy and sell signals, so our entries, as well as multiple plots of the indicator for a trading system. Using 2 of these indicators, one gives us a trend filter, which can help decrease the number of whipsaw trades we take with the slow one. And as always, proper risk management is absolutely vital. And you can use the ATR, the average true range, to help position your trades. Okay, thanks for watching. Hit subscribe and that alert button, and we'll talk soon.